Hello everyone and welcome back to Southern Wealth. I'm back in my castle after some long and I think deserved vacation. I've been off in the past few days. I really wanted to enjoy the last few days off with the family. I hope you can understand that. And I'm back to my house, back to the old recording place, and with my energies quite recovered and my batteries all stored up for the upcoming winter. Now guys, if you do enjoy the content, please consider dropping that like and subscribe. It greatly helps the channel, so thank you very much. Now, I wanted to discuss quickly around the CPI report that came out last week. A bit less than expected. PPI was a bit higher than expected, which is the producers, if you will, it's the company's inflation. And by the way, this is something that needs to be said. Even in the highest inflation periods back in the 80s, you never had inflation, or it's very rare that you see any market for that matter, inflation, stocks, whatever, that just go down every single time with no, in between increases, or the other way around. It's very rare that you see a market going up or any indicator going up without a few months of going into the reverse position. Now, stocks are actually have retraced quite a bit. You may recall back in late July, I believe, I had said, look, we just pushed over 4,600. It will actually be bullish if we retrace part of it for a little while, but we cannot obviously sell too much. But I said if we would go down 5% or 6 or 7% would actually be a positive, and that actually goes in line with, you may know this or not, August and September tend to be negative months for the stock market, particularly September. October is actually, most of the times, is actually a green month, but the problem is a lot of the big collapses happened in October. So October gets this, this bad reputation as being a very negative month for the stock market. Is actually almost all the time very positive, but indeed you do see some collapses happening in that month. But if you look at a longer time frame, you'll see there actually tends to be a green month. Now, I do think we're still going to see all-time highs, S&P, Nasdaq 100, Dow Jones by Q1 2024. That means until March 2024. Russell, more difficult to say, but we will see. Now, the big forest, the big picture, the big mountain that you should be looking at was the bonds collapsing. So when you see bonds going up, rates going up 30 basis points, which is 0.3%, 0.2% on a daily basis, that for the bond market is very important. It's very meaningful. It's not like stocks, which can go down 1% today, 2% tomorrow, 3% the other day, and doesn't mean much sometimes. When bonds do it, because bonds are about 3 times bigger than the stock market, then it becomes very meaningful. And I think what the Fed is doing, and I think finally people are starting to understand what I've been saying for months, which is the Fed wants to get out of the game of printing money, tightening, trying to micromanage the economy and the markets like that. The problem is, in my opinion, is how will they do it if the trade deficits and the budget deficits keep exploding, because then the interest payments are far too high. But if the Fed could have its way, I think they want to keep higher rates for longer. I think we still have another rate hike coming. I don't think it makes any difference whatsoever at all anymore. But I do think what they want to do is to keep the rates as they are for 1 year, 1.5, 2 years, however time the markets can give them, because Powell many times says, we don't comment on on fiscal policy and things, but they should, because when the governments are running those huge deficits, who are the buyers of the bonds the government will issue to finance all of that? The Fed. So the Fed is actually the buyer of last resort that cover up all this crazy spending from the population. I wanted to make a little side note to end this video here, which is people have said, oh, you mean that we can just print money out of thin air? This is Harry Dent, for example. So this basically, we get something for nothing, right? So we print money, which costs nothing, and our economy and markets go up. No. The price you're paying is credit card debt above $1 trillion for the first time. One single salary back in the 60s was enough to have 3 children, 1 house, 2 cars, vacations, everything. And now, 2 people with a master's degree can barely afford 2 kids. So that's the price you're paying, okay? And what I'm trying to say is that this behavior from the governments will have a cost. Particularly the US government will have a cost. The US dollar will stop being the reserve currency one day, just like the Dutch currency, just like the Libra, the pound in the UK stop being the reserve currency. The US will follow the same. Now, what I'm trying to say here is that these things don't happen over time. Don't happen overnight. It's not going to happen within 6 months. And whoever tells you that they can see exactly when it's going to happen, they are just fooling you around. And the idea is to keep you interested so they can collect newsletter money, courses money, you name it. So don't fall for that. What I'm trying to say is, yes, what did I mention a few weeks ago? No, it's not the banks. No, it's not commercial real estate. It's things that people are not looking at, just like the government debt. What triggered the sell-off? The bond market going ballistic. Why you should pay attention to the bond market? Because the bond market is 4 times or 3 times the size of the stock market, and if the bond market collapses, you better be sure that all the other markets collapse. So what I'm trying to say is, what we're experiencing so far is the typical seasonal sell-off that you see in August and September. So far, the behavior that you're seeing in stocks is actually bullish. So far. Does that mean that it's impossible to crash? It's impossible to collapse? No, it's not impossible to collapse. But still, every time we have a sell-off, you have all these people talking about crashes and depressions. As long as this happens, you will not see it, in my opinion, developing. You need to see it when all of these bears become bullish and they throw in the towel. And most of the videos you see are about how the world is nothing but roses from here. That's when most likely the top has arrived. So be very careful, guys, and I'll catch you in the next one.